Indexes have been choppy, but this hasn't stopped individual names from going on big rallies. And even though the market looks very bullish, there is some trouble brewing underneath the hood. So let's make sure that we don't overlook some of the data points that we've had in recent and talk about some of the ones that are coming up. We'll also take a moment to visit what's going on in bonds and energy, talk about some reports that have been coming out from the big banks. Maybe subscribe and like the video, that helps too. And of course, we'll be talking about some of the plays that I've been posting on Twitter and Discord. Of course, you need to be in the Discord to see all of them. We've been having big wins in this market when it comes to Roblox, when it comes to Meta, when it comes to Shopify, Tesla. We played Meta both sides, played Google both sides. I mean, these have been great returns here lately in the Discord. Special shout out to one of our newer subscribers, Raka Flocka, whose account was decimated, ended up bringing it back to life, 184% returns to get back to even. And then just yesterday was up 120% overall in his account. I mean, just stellar. Now, before we talk about the other plays that I'm going for, let's talk about this new Bank of America report, because I think this is really interesting. Now, remember, we're not actually looking at the raw data from Bank of America. This is the Reuters article about it, which means they're skewing the data in a certain light. And it's important that we don't get too sucked up in their narrative, but they did include some big takeaways that I want to point out. Just 24% of the 299 fund managers that were interviewed think that a recession is still a possibility this year. That's a huge shift from the 77% who said the same thing in November. But another thing to take note of is there's still a lot of cash on their books. So they're not fully allocated in the market. And in fact, most of them are still holding bonds, not equities. So when I look at how the market is performing, I'm seeing, okay, all the dips are being bought and stocks seem to not want to go down. And this is likely a big reason why, as some of these managers are saying, okay, I'm underweight equities. This market's continuing to be strong, even after we had a poor CPI report, which, remember, that report was bad. It was actually over the expectations of the market. And the thing is that it was pretty telegraphed. And I even mentioned this to the Discord members. Hey, I don't think this will actually be a big report because it was so telegraphed. We saw so many people saying that this will likely be a bad report. And when we see that happen, it usually means a bunch of hedging has already taken place. The market makers, therefore, are long on the underlying, because if you buy a put, they're likely buying a call, or they're just buying the straight up stock, which makes them long on that position, which means that if there is a sell-off, it's likely very muted by the fact the market makers, the guys who never lose, are on the other side of your trade. But that doesn't just apply to that CPI report. I think that applies to the greater market right now. And I think as we see people get longer and longer, we're going to have some more disruption, some more aggressive sell-offs and pullbacks on this market as people start to take on some more risk, which is exactly what we're seeing fund managers do. And the last thing that I want to touch on from that report that Reuters actually mentioned as well is how many people are long Chinese stocks right now. They're looking very overweight. And I've talked in the past how we do have a BofA short set up, but just overall, the Chinese market seemed very overbought, as many investors were eager to benefit from the fact that the Bank of China was straight up just buying equities and telling investors to buy. And I think right now is a great time to be looking for more short positions there, especially if you're long on equities or just trying to hedge against a long portfolio overall. And speaking of short plays, let's talk about one of the short plays that I just set up, and that's on Upstart. This company recently had a massive rally after they surprised expectations, where investors were excited to see that they didn't bleed as much as was expected. However, the underlying company is still a disaster. And this has been a sad story from the start. The company IPO'd overvalued, mooned on this hype that the AI would make loans better somehow, even though it's the same stuff that everyone was writing. And now in an environment where people have way too much credit, their savings accounts are low, we're seeing lots of people default on things like car loans and just have too much credit in general into what is still has a pretty decent expectation of recession. Even though it's come down, like we saw from the Bank of America report, it's still just not boding well for the stock. There's a reason that there's about a 40% short float on this stock. If you're not familiar with what a short float is, that means out of the 100% shares that are available to be shorted, there's 40% have been utilized. Now, this does mean that there is a risk of a squeeze to the upside for this stock. However, I think a lot of that short covering already occurred on this rally, and subsequently afterwards, I would like to come in short and see this likely revisit $15, $14 to take some nice profits. Now, let's talk about Bitcoin. This has really surpassed my expectations. We've seen this continue to rally today, making another leg up, looking like it's headed for 25K. It wants it no matter what. and this has led to a bunch of rallies in coin. Now, this pullback in coin is really important, is really essential that you watch that short so that you know what's going to be talked about in this earnings call. It's really important, the regulation that's occurring with staking. And so for that reason, I would definitely want to be short in earnings, especially since this company isn't really making a ton of money until Bitcoin can consistently stay above 25K. Now, on a dip on that earnings, I would love to come back in long on Coinbase again. But I think a sell-off after earnings is a really high potential here. For that reason, it could also be very well priced into those options, but that's something I'm definitely going to be keeping an eye out for. Another thing that I'm still been preaching about this, we've talked about this before, but I just want to mention again, Grayscale Bitcoin Trust is likely going to be a huge winner in the future. If this turns into an ETF rather than a trust, which is more likely as we get more and more regulation, it becomes a possibility for them to do this. This company is straight up undervalued. I mean, we're talking a 40% undervalued from what they should be, and the hype will likely send them well above that. And so this is a long position as one of those sneaky ones that not a lot of people are paying attention to still, surprisingly. I think is a great play. And if we take a look at the index, you can see we're still stuck in this chop zone, although it's looking very bullish to me, especially with all these reports that we're seeing. A lot of people are now saying that there won't even be a recession. I don't agree with that. I'm still in the recession later in the year. I'm still in that camp. But if I use that bias to power my short-term trades, I'm likely going to get blown out. I know we came up with a few short positions here, but that doesn't mean my portfolio is overall short now. I'm actually overall long on this market and just hunting for as many short positions as I can to try and make sure that I do have some balance in case we turn over. It's so important. You do not have to be one-sided. Play both sides, win no matter what. And speaking of winning no matter what, let's talk about one of the losers that's been trying to bleed my portfolio right now. I've been long on bonds like a lot of these hedge funds, and we've seen that the price action here has been really iffy. I ended up cutting a lot more of my short-term calls, and right now I only have leaps for the 120 and 130 strikes for next year in January expiration. And I'm looking at this right now. I have these supports set up. I saw that we broke 103. I started cutting my shorter term positions, trying to manage some risk here because it looks like a gap down to 99 is very likely. If we don't hold the support, look for 93. It could get rough, especially since that inflation report was so high. This could mean that the Fed says, hey, instead of actually pausing after that last hike, we're going to keep hiking for a bit more. And I think given how the market is acting, there's plenty of room for them to do just that. And I think that's what's eventually going to cause a lot of people to get back into the recession camp, is the Fed's going to keep tightening and ignoring these obvious signals. There's some job cuts, there's some weakness in a lot of markets, there's high credit, there's not a lot in savings, and I think that this mild recession expectations are going to have a sharper drop off later in the year than what people are expecting. However, right now, it's bye. But like I said before, if people start getting really long and taking on more risk in the market, they're not hedging as much, it actually creates an environment where the market can have some bigger drawbacks. And I think TLT is going to be a great signal for that. Don't forget, next Wednesday, we have the FOMC minutes, and this is going to be important because we're going to get some updates on the type of language the Fed is using when they're talking about how tight they're going to get and how long they're going to stay tight. And I think that they're going to continue tightening. I don't think that they're going to pause, especially after that last inflation print that we got. And I think TLT will signal that to you. If this starts to pull back, the market might continue to melt up, but it will only be a matter of time before the market needs to catch up to the tightening, to the further tightening that the Fed is going to do. We've seen that the market's not pricing in any more hikes, hence why it's been so strong. In fact, it thinks that the Fed can actually safely land this market. I don't think that is a high probability whatsoever. Speaking of using TLT as an indicator for bonds, we also want to talk about using the US dollar futures and the VIX. VIX is going to tell you the overall fear in the market. We've seen it melt down as the market's melted up. A big indicator for that CPI report is we saw that VIX was aggressively melting down afterwards, and that may give me the indication that, hey, even though this dipped a little bit on the report, it looks like we're about to rally. And if we look at DXY, dollar being down is good for the markets, okay? And remember when we had all that issue in the market when the dollar was at 114, And now that it's come down a bit, there's been a breath. It's important to remember, though, that the dollar milkshake theory, which we've been talking about a lot if you've been following me, can still allow for pullbacks like this. And if we look at a 3-week graph, we can see that the US dollar futures are still pretty high. And in fact, they're making a pretty significant recovery. This could cause future issues in the market. And I think it's really important that you start paying attention to this again. We don't want to see big moves to the upside for DXY. It could spell trouble for the markets. Same thing with TLT. If you get a big move to the downside here, that's not so hot for the market. If this decides to rally back up, though, it could show some more health for the markets, and it could be signaling that the Fed will in fact pause. And that's going to be it for this weekly report. It's coming out really late, so this will be out on Thursday morning, just because I'm not going to upload something at midnight when no one's going to watch it, and the algo is going to kill it since it's going to sit dead likely for about 6 hours before anyone gets around to watching it. So I'll go ahead and just set it to upload at like 6 a.m. tomorrow. But I do want to thank everyone that's been following me on Twitter. Twitter account's been absolutely exploding, 1,400 followers now. That's 3x my following there in just a week and a half. I've been trying to post more trades and more input on there, kind of what I do in the Discord, or have been doing in the Discord, just on Twitter instead for free. And it seems like people are really enjoying that, and I appreciate your following. If you're from there and you're watching this for the first time, thanks for also watching the video. I hope you found it helpful, and if you did, I appreciate it if you subscribe, like the video, and ring that bell so you don't miss future videos. And on that note, I am going to enter a coma until tomorrow morning. Good night.